Stocks were mixed during Thursday trading, with the S&P 500 on the brink of breaching the 5,000 milestone for the first time ever. The Dow Jones Industrial Average dipped 110 points, or 0.3%, while the S&P 500 inched was little changed. The Nasdaq Composite edged up 0.3%. Earnings remained top of mind for investors, with Disney surging 10% after beating quarterly earnings estimates and raising its guidance. Chipmaker and designer ARM jumped 55% after reporting stronger than expected earnings and providing an upbeat profit forecast. Yields rose Thursday with the 10-year Treasury note last at 4.15%. The move in yields put some pressure on stocks despite a raft of stronger than expected earnings reports that have lifted investor confidence that a robust economy can continue driving corporate profits and growth. Earnings continue to come in better than expected, and contribute to some pretty positive moves in specific stocks, said Michael Arone, Chief Investment Strategist at State Street Global Advisors. Overall, in terms of sentiment, that's allowed the market to continue to touch new highs. This season, 77% of S&P companies reporting so far have topped earnings expectations, while about 68% have beaten sales forecasts, according to FactSet. These strong earnings, and a continued chug higher in mega-cap technology stocks, have boosted the market in recent sessions. But concentrated leadership in 2023's darlings has been a matter of concern for some investors in recent sessions. Arone attributed narrow breadth to the renewed uncertainty surrounding rate cuts after Federal Reserve Chair Jerome Powell and other officials talked down hopes for a March cut. As that's become less certain, investors have gone back to the early 2023 playbook, which was just to invest in large-cap quality tech companies, he said. That needs to change in order for this market to continue to have a sustainable rally. The earnings season continues after the bell with reports from Expedia, Affirm Holdings and Take-Two Interactive. Energy was the best performing sector in the S&P 500 during morning trading, rising 0.8% alongside a 2% jump in oil prices. ConocoPhillips was the top performer in the sector with a 2.5% gain. Devon Energy, Pioneer Natural Resources, Coterra and ExxonMobil rose at least 1% each. The Renaissance IPO ETF, which contains the largest newly listed public U.S. companies, rose nearly 4% Thursday morning and is on pace for its third straight winning day. Chipmaker ARM Holdings, which is rallying more than 57% for the day, is leading the ETF's gains. Cloud software company Confluent is also up around 34%. PayPal shares slumped nearly 10% after the digital payments company issued disappointing guidance. The company said it anticipates full-year earnings to come in at $5.10 per share, below the $5.48 analysts polled by LSEG anticipated. For the first quarter, PayPal also projects earnings growth in the mid-single digits, versus a consensus estimate of 8.7%.